Hey everybody, it's Tom Sheehan of the Sheehan Real Estate Group of Compass here with a fall of 2022 market report. A lot of talk in the news about the economy and the housing market, specifically around interest rates. And I just wanted to give you my thoughts on what's going on and maybe what you can expect here over the next 6 months in the local real estate market based on what I'm seeing out there. And if you don't want to stick around for the whole report, here's the bottom line. Interest rates are definitely having a significant impact on the local real estate market, but maybe not in the way that you expect. We're seeing a higher days on market, more accumulation of inventory, but we aren't seeing a dramatic impact on the sale prices of homes, the home values yet, because not only are interest rates deterring buyers, they also appear to be deterring sellers. And since those sellers are remaining on the sideline, we're not seeing the new inventory we need to accumulate and have that downward pressure on sale prices, at least just yet. So getting into the details, it really starts with interest rates. Interest rates right now in early November of 2022 are in the high 6% range, even ticking above 7% for a brief period of time. That's a dramatic increase on what we were just seeing earlier this year when rates were in the low 3% range. And as many of you know, interest rates have a significant impact on buyers' budgets. Even a small percentage increase in interest rates can affect buyers' budgets by hundreds of dollars a month. Just to give you some perspective on how interest rates can affect a buyer's budget, if we look back when interest rates were at their lowest, which was about a year and a half ago when rates were in the high 2% range, a buyer who wanted to have a budget of around $3,000 a month for their mortgage payment plus interest would have a budget of around $725,000 for a loan size. At today's rates, if your monthly budget for your mortgage payment plus the interest on that at $3,000 a month, you're looking at a loan size of only $475,000. So buyers' buying power has been reduced by hundreds of thousands of dollars. So you would think if buyers' buying power had been so dramatically reduced over these last few months, well, then we should be seeing a significant decline in home prices. While it's true that the median sale price pace of gains as the year has gone on has declined from earlier this year, this cost of a single-family home in Greater Boston is 5% higher this fall than it was last fall. And to give you more perspective, the median sale price of a single-family home in Greater Boston is up 25% this fall when compared to fall of 2019, just 3 years ago. The effects we're seeing so far on the housing market from these higher interest rates is a larger number of days it takes before a seller accepts an offer, and the number of homes that have had a price reduction has increased. The reason why we've seen such resiliency in the median sale price is because this fall we've seen a dramatic reduction in the number of homes listed for sale compared to prior years. In the fall of 2022, we've seen the fewest number of single-family homes listed for sale in Greater Boston in the last 10 years. And in the last 20 years, there's only been 1 year where we've seen fewer single-family homes listed for sale in Greater Boston during the fall months. So despite this record low number of new listings on the market, we're still seeing inventory hanging around. We're still seeing homes taking longer to accept an offer, and we're still seeing a lot of price reductions. Ultimately, what is happening is the most desirable homes are still getting a lot of attention from the buyers who are still out there, so it's not uncommon to see those homes receive multiple offers and going over the list price. But buyers are still very discerning. They're no longer willing to make an offer or pay a high price for a home that doesn't either fit their needs or isn't move-in ready. And that lack of new listings really tells me the impact that interest rates are having on sellers as well. Sellers might be looking at the interest rates and saying, well, the buyer of my home cannot afford as much, so I'm going to wait to sell my home until that buyer has better buying power when interest rates reduce. And they also might be looking at their payment for their current home, which has an interest rate that's way below the current rates, and find that they can't buy what they want with their monthly budget based on where interest rates are now. So they're deciding to hold off on selling their home and looking for their next home. So the big question is, what's going to happen over the next 6 months? Well, right now we're entering the winter market in the Northeast, which generally is a slow time anyways. We can compare this winter market to prior winter markets, but the market activity is always very depressed in the winter. The real question is, what can we expect in the spring market? Listening to mortgage rates experts and economists, we're really at a key time with interest rates. We are bumping up against this 7%, which traditionally is a level of resistance for interest rates. These experts say if we break through that 7% level of resistance, the next level of resistance is 8.5%. So we can't rule out getting to that interest rate by the time we reach the next spring market. And going even further, if we get beyond 8.5%, the next level of resistance is in the 10% range, which would have a dramatic effect on real estate, especially buyers' budgets and sellers' willingness to sell. So interest rates are going to have a big effect, but I still expect there to be a lot of buyer demand out there. Rental rates in Boston are insanely high. The city of Boston saw the second largest year-over-year increase in rental rates in the entire country. And our local demographics are such that we have the same number of buyers entering their prime home buying ages that we've had for the last few years when we've had extreme inventory crunches that have led to competitive offer situations, increasing the median sale price. The big question for me is if these increased interest rates are going to continue to keep sellers on the sidelines. The reality is some people have to sell, but many people have a choice. And if we see a lot of those buyers who have a choice choosing to not list their home, it's just going to create more pressure on the housing market, especially for those homes that are most desirable. So while we may see fewer buyers in the market because of the higher interest rates, that might be matched by the same number of fewer sellers in the market, which is going to mean we're still going to have pressure for those fewer homes that are on the market, because ultimately it's a supply and demand thing. Even if our demand goes down, if our supply goes down with it, it's hard to see a major pricing correction in the greater Boston area for single-family homes. One of my thoughts is we might actually see the return of the fixer-upper. For the last few years, a fixer-upper was still going to cause a competitive offer situation that was going to get bid up, and ultimately once you actually fix it up, you're probably going to end up paying more than you would have if you just bought a home that was move-in ready. With more discerning buyers not willing to settle for a home that isn't move-in ready, we might see the biggest price adjustments in those homes that need some work, and that might be where some opportunity lies for buyers. That's all I got for this market report. I hope you found it helpful. I hope you found it informative. Obviously, everyone's personal housing situation is unique to them. If you have any questions about your personal housing situation or that of a family member or friend, I'm more than happy to have a conversation with you and give you my thoughts on how the best way to proceed would be. So give me a call, shoot me a text, or send me an email. Thanks for watching.